Hey there, welcome back to the channel. Today, we're diving into something that can seem complicated but is actually easier to understand than you might think. Stocks and the stock market. If you've ever wondered how stocks actually work, why they matter, or how you can get started with investing in them, you're in the right place. We hear about stocks all the time, on the news, in conversations with friends, and in financial headlines. But when it comes down to it, what exactly are they? How do they work? Why do people buy and sell them? And how does the stock market fit into all of this? By the end of this video, you'll have a solid understanding of how stocks function, what role the stock market plays, and why it's such a key part of growing wealth. Whether you're just getting started or you've been thinking about dipping your toes into the stock market, this video will help clear things up. So, let's get started. Okay, let's begin with the very basics. What are stocks? In simple terms, a stock is a piece of ownership in a company. When you buy stock in a company, you become a shareholder, meaning you own a small part of that company. It's like owning a slice of a pie. Every share you own is a tiny piece of the bigger company pie. Now, why would anyone want to own a piece of a company? The answer is growth. When the company does well and becomes more valuable, the value of your stock can increase. Plus, some companies pay out dividends, which are regular payments made to shareholders from the company's profits. So, owning stock gives you a chance to earn money in two main ways: through capital gains, when the price of the stock increases, and through dividends. So, you now know that a stock is ownership in a company, but how exactly do they work? Here's the deal. When a company needs to raise money, they can issue stock through an initial public offering, IPO. An IPO is when a company sells shares of itself to the public for the first time. Once the IPO happens, the stock is then traded on the stock market. But here's the thing. Once the stock is out there, the company itself doesn't actually make any more money from those trades. It's the buyers and sellers on the stock market who make money from buying and selling those stocks. Let's break it down. If you buy a share of Apple stock at $100, you've just paid someone who was selling that stock. If Apple's stock price goes up to $150, you can sell your stock for $150, making a profit of $50. This process of buying and selling stocks is what happens in the stock market. The price of a stock is determined by supply and demand. In other words, if more people want to buy a stock than sell it, the price goes up. If more people are selling than buying, the price goes down. Now let's talk about where these stocks actually get traded. The stock market. The stock market isn't just one place. It's a system of exchanges where people can buy and sell stocks. In the US, there are two main exchanges, the New York Stock Exchange, NYSE, and the NASDAQ. You've probably heard of both of them. Think of the stock market like a giant auction where buyers and sellers meet. People offer their stocks for sale, and buyers place bids on those stocks. The price goes up and down based on how many buyers and sellers are there and how much people are willing to pay. But the stock market doesn't just function by letting people buy and sell stock. It also helps companies raise money. When a company sells stock through an initial public offering, it gets that money directly to fund operations, expand, or pay off debt. After the IPO, the stock gets traded on the open market, where the price fluctuates based on demand and performance. Alright, so how do stocks actually make money for you, the investor? There are two primary ways. 1. Capital gains. When the price of the stock goes up, you make money through capital gains. Capital gains happen when you sell a stock for more than you bought it for. For example, if you bought 100 shares of a company at $50 per share, and a few months later the price rises to $75 per share, you could sell your shares for $75 each. That's a $25 profit per share. Stocks are long-term investments. Sure, you can make short-term gains if you time the market right, but the real money usually comes from holding onto stocks for a long period, allowing the company to grow and increase in value. 2. Dividends. Another way stocks can make money is through dividends. Some companies choose to pay out a portion of their profits to shareholders in the form of dividends. For example, let's say you own 100 shares of a company that pays a dividend of $2 per share. That means you'll receive $200 in dividend payments each time the company pays out dividends, which is typically every quarter. Not all companies pay dividends, especially if they're newer or if they're reinvesting their profits into the business. But for established companies that generate consistent profits, dividends are a nice bonus for shareholders. I know what you're thinking. If stocks can make money, what's the catch? And the truth is, there are risks involved in investing in the stock market. Stocks are inherently volatile, meaning their prices can rise and fall very quickly. You might see big gains, but you can also see big losses. Sometimes stock prices fluctuate because of factors outside the company's control, like changes in the economy, geopolitical events, or even things like a pandemic. The stock market as a whole can go through periods of decline. This is known as a bear market, where stock prices drop for a significant period of time. During these times, you might see your portfolio lose value. However, if you hold on and continue investing through the downturn, history shows that the market usually recovers over time. So why do people take on these risks and invest in stocks? Well, it's all about growth. While savings accounts and bonds are safe and stable, they don't offer the potential for the same kind of returns that stocks do. Over time, investing in stocks can lead to greater wealth than simply saving money in a bank account. Another reason people invest in stocks is for financial independence. Stocks offer the potential for passive income, especially if you invest in companies that pay dividends. With enough dividend-paying stocks, you can start earning a regular income without having to work for it. This can be a way to supplement your salary or even replace it entirely if you invest wisely over the years. Now that you understand how stocks work, you're probably wondering, how do I get started? The first step is to open a brokerage account. A brokerage account is where you'll keep your money and buy stocks from. There are lots of brokerage platforms out there like Fidelity, E-Trade, Robinhood, and others. Most platforms are very beginner-friendly and let you start with small amounts of money. If you're new to the stock market, start small and focus on understanding the basics. You can invest in index funds or exchange-traded funds, ETFs, which are less risky and provide broad market exposure. These funds allow you to invest in a whole bunch of stocks at once, giving you diversification. When you invest in stocks, it's important not to put all your money into just one stock. Diversifying means spreading your money across different companies and industries. This helps reduce the risk of losing money if one stock drops in value. Investing in stocks is a long-term strategy. You don't want to get too caught up in the daily fluctuations of the market. Instead, focus on your long-term goals and stay patient. The stock market will have ups and downs, but over time, the value of your investments will likely grow. So that's a quick breakdown of how stocks work and why they're such an important part of building wealth. By owning stocks, you become a part owner of a company and you can profit through capital gains and dividends. But remember, stocks come with risks and the market can be volatile. If you're thinking about getting started, open a brokerage account, start small, and remember to diversify your investments. Over time, investing in stocks can help you build financial security and independence. I hope this video has helped clear up any confusion you might have had about stocks and the stock market. If you found this video helpful, don't forget to like, share, and subscribe for more personal finance tips. Thanks for watching, and I'll see you in the next video.